Guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from myself or the rest of the team here at Daily Market Movements, then you can do so for a very small fee of $199 for a year's membership. All you have to do is scroll down, and in our description I've left the website link. Click on that website link, which will then take you to our website, and then you'll be able to join our signal team by purchasing the package on our site. In front of me is the crude oil futures chart, and as you can see, the market we did rally towards the upside, and I can now finally say that we have officially closed the gap. We were trading as high as $41.60. So if I just put a black line at $41.60, let's just do it like that. There we go. Roughly have it. There is a line, so we have now officially closed a gap. As you can see, we tapped that black line, which I was talking about, and also just above there, even if we did go a little higher, we then have the 200-day EMA, which would offer plenty of resistance. So we've had a great rally from around about $10, well, minus 44, but I'm going to speak from a $10 point. We've had a great rally here, and now I think that the market finally has to give something back. So I am looking for a dip. Anyone who's been watching my videos over the past couple of days, I have been calling for a dip in the crude oil markets. I've had a load of you comments saying, Max, no way, the market's going to $50. Max, you don't know what you're talking about. Max, blah, 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 blah. But the truth is, the majority of these people are retail traders and are new to trading, or they've only been trading for a year or two, and they're probably going to make the same mistakes that I used to make when I first started trading, and that is getting caught in the bull trap and buying assets at the wrong prices. And as you can see, yesterday it was all over CNBC this morning that oil prices close above the $40 handlestick for the first time since March, and so many traders would have been, oh my god, yes, oil's going to $50 a barrel. You are wrong. Let me just tell you something. Hedge funds and managed money banks, they have long positions and short positions at the exact same time. They may, so for example, if they're bullish on a certain asset, they may have more long trades open than they do short. But even when the market goes down, they are still able to make money. So I know that last week, hedge funds and money managers, they trimmed their net long trades for the first time in about 2 months. So that to me kind of rang some alarm bells. But of course they still, although they've been making money all the way up from the $10 handle, they also have short positions open, which they're opening up along the way. Even when they added to their net long trades about 2 weeks ago, they were still adding to their net short. So even if the market dips to around 35, they are still making money, guys, and that's all what needs to happen. They just need to take profit on the net long trades, and that's what starts to ring my that's what I'm kind of focused on at the moment. That hedge funds and money managers, they closed their they closed off a lot of their net long trades in the previous week, and that sometimes that can start to set a trend. And we've had a great run here from $10 a barrel all the way up to $40. So if they continue to close up and take some profits on their net long trades that they've had open now for the last 2 to 3 months, that could cause the market to go down to $35 a barrel. Also, we have the fundamentals supporting this as well. We've got cases all over the US. I think more than half of the states now have seen a huge rise in coronavirus cases. We've got Florida, who had their record number of cases yesterday. So these are all fundamental reasons that will kill the demand for oil, and that then leaves supply. So it's just simple supply and demand. Like crude oil, I do expect it to go back down towards $35. I'm not saying that I'm long-term bearish on crude oil, because I'm not. I'm long-term bullish. But all I'm saying is be very wary, because these hedge funds and money managers are likely to take their profits on their net long trades that they've had open for some time now, which I can guarantee are trading in very good profits, very large profits. So they might want to take some profit. As the saying goes, no one become broke from taking profit off the table. So do be wary of that, guys. I am a seller short term going into Wednesday, but longer term, I'm also a seller going down towards $30. But eventually, I do think that oil does break out of the 200-day EMA. It's just going to take a lot of time and potentially even a vaccine to